$250 billion for a company he already controls.
It's the ultimate left pocket, right pocket transaction. But you can't deny the gravity, Maya. This SpaceX mega deal just pushed Q1 global M&A over $1.2 trillion.
Oh, please, 29% of that volume is just AI panic buying. Traditional acquirers are scrambling before valuations completely detach from reality.
I actually think the math works if you squint. Let's pull up the term sheet on this monster. The rundown. $14.2 billion to buy back exactly what you already built. Intel buying out its Ireland fab joint venture is the most expensive undo button I've ever seen.
It's a massive flex, but I really just want to see the filings tomorrow. Where exactly is that financing coming from? You don't just find $14 billion in the couch cushions.
The debt syndicate on this is going to be a beautiful bloodbath of fees. Speaking of flexes, Uber is buying Blacklane, premium chauffeurs.
Because nothing says high-growth tech platform quite like owning a fleet of Mercedes sedans and guys wearing little hats.
Oh, come on. The unit economics on luxury are fantastic. Uber conquered the masses, now they want the corporate black card. It makes total sense.
Does it? I look at this and see a low-margin, capital-intensive headache. Uber spent a decade trying to get away from owning physical assets. Now they're buying right back into them.
They're buying the clientele, Maya. Same reason Estee Lauder is suddenly whispering to Puig about a massive stock tie-up. The high end is where the margin is.
I'll believe the Puig rumor when I see a definitive agreement. A stock-based tie-up in beauty right now is just bankers throwing spaghetti at the wall.
Spoken like a true cynic. But you can't be cynical about Google and Wiz. $32 billion for cloud security, and they actually got regulatory approval.
That's the actual shocker here. The fact that global regulators looked at Google writing a $32 billion check and said, sure, go ahead.
I had to read that press release 3 times. I was convinced there was a typo.
No typo. Just companies refusing to wait for perfect conditions. First quarter deal volume just crossed $1.2 trillion globally, up 26% year over year.
And let's be honest, 29% of that is just people slapping the letters A and I onto a pitch deck and adding a 0 to the valuation.
Traditional tech acquirers are absolutely panicking. They're scrambling to find targets before valuations completely detach from reality.
Too late. Reality left the building about 3 days ago. Which brings us to the rocket ship in the room. $250 billion.
Elon is basically playing Monopoly with fake money at this point.
SpaceX and xAI, the biggest, weirdest, most valuation-defying mega deal we've ever covered. We need to tear the structure apart. The big one. $250 billion. I just need to say it out loud a few times so my brain accepts it. $250 billion.
And all it took to get there was Elon Musk buying a company from Elon Musk.
Hey now, there are independent boards involved here. Probably. Somewhere. But look, this SpaceX and xAI tie-up just pushed Q1 global deal value over $1.2 trillion. That is a 26% jump year over year. The mega deal is officially back.
Is it a mega deal, or is it just an AI hallucination? Because I read the filing, Nate. How do you justify $250 billion for an AI lab that barely existed 3 years ago? I looked for the revenue multiples, and my calculator just started laughing at me.
Compute, Maya. It is all about compute, power, and data. SpaceX has the infrastructure, the Starlink data pipe, the captive energy access. xAI has the models. You put them together, and you have a vertically integrated tech behemoth that does not have to beg Microsoft or Amazon for server space. It is actually a brilliant hedge.
Oh, please. You are putting your banker hat on and trying to make a massive related party transfer sound like a strategic masterstroke. It is a cash grab masquerading as a synergy play. xAI needed billions to train its next model, and SpaceX happens to have a giant balance sheet.
A $250 billion cash grab. Come on. You do not print that kind of valuation just to move money around between your own LLCs. The market is pricing in the literal future of autonomous infrastructure.
The market is pricing in magic beans. Look at the broader data. 29% of all deal volume in Q1 was AI related. 29%. We are watching companies panic buy anything with a .ai domain name because they are terrified of being left behind. The valuations are completely detaching from reality.
But that panic is exactly what drives a trillion-dollar quarter. Industry observers are saying companies are refusing to wait for perfect macroeconomic conditions. They cannot sit on their hands. If you wait right now, you die. Or worse, you become irrelevant.
I would rather be relevant and profitable than write a check for 100 times forward revenue, assuming there actually is forward revenue, which the footnotes conveniently obscure.
Spoken like a true skeptic. But you have to admit the sheer scale of this SpaceX move is forcing everyone else to scramble. Traditional tech acquirers are looking at this $250 billion print and realizing they need to lock down their own targets immediately.
Which they are doing. Even the regulators are getting out of the way. Just look at what Google finally managed to push across the finish line for $32 billion. Voices.
So I am reading this analyst note from a major desk this morning, and they claim AI is single-handedly driving this mega deal resurgence. They point out that AI transactions made up 29% of total Q1 deal volume.
I read that same note. And honestly, the phrase single-handedly is doing a ridiculous amount of heavy lifting there.
Oh, come on. Nearly a third of the market is massive. You just saw Google finally close on Wiz for $32 billion. The traditional tech guys are absolutely terrified of missing out. They are literally scrambling to find targets before valuations completely detach from reality, which, by the way, might have already happened.
I am not denying the panic buying. The FOMO is real. I am just looking at the math. If AI is 29%, that leaves 71% of the $1.2 trillion pie doing very traditional, boring things.
Okay, sure, but the narrative?
The narrative completely ignores the actual plumbing. Look at Intel dropping $14.2 billion to buy back a 49% stake in their Island Fab joint venture. That is pure infrastructure. Or look at the beauty sector. The whispers are getting super loud that Estee Lauder and Puig are advancing talks for a massive stock-based tie-up. Last I checked, lipstick is not powered by large language models.
Give it 6 months. Some VP at Goldman is definitely going to pitch generative mascara.
Please do not give them ideas.
You know, I'm right, but fine. Look beyond tech. The other fascinating quote going around is that European dealmakers are actually outperforming North America right now on post-deal share price.
Which completely tracks. European buyers are pricing in geopolitical reality, not a sci-fi future. They are doing sensible roll-ups while Silicon Valley plays Monopoly with fake money.
Speaking of sensible moves and reality checks, we need to talk about what is happening in biotech tomorrow.
Yes, Gilead just officially extended the clock on their RSLX tender offer, and I have some serious questions about the timing. Spill the tea.
I am hearing the Estee Lauder and Puig whispers are getting very, very loud.
Loud is an understatement. My inbox is practically screaming. But a primarily stock-based tie-up. I need to see the exchange ratio before I buy into this one.
You have to look at the European momentum right now. European dealmakers are outperforming North America across the board. Puig stock is an incredibly strong currency. Estee wants that prestige fragrance portfolio.
Puig just went public. They are still in their honeymoon phase. Why would they dilute that with Estee's turnaround baggage?
Because you do not say no to global distribution infrastructure when it is handed to you on a silver platter.
I say no if the silver platter is tarnished. Estee has had a really rough year.
Fair. But speaking of rough, look at traditional tech acquirers right now. They are absolutely sweating. The SpaceX and xAI deal just broke the thermometer. $250 billion.
AI was 29% of the total deal volume in Q1. That is absurd. The valuations have completely detached from reality.
Which is exactly why Google just finalized that $32 billion Wiz acquisition. They had to close it. Traditional tech is panic shopping. They are walking the aisles of the M&A supermarket, throwing whatever they can into the cart before the AI valuation bubble pushes everything out of reach.
I completely disagree that Google is panic shopping. Wiz has actual revenue. It is a real business, not just 3 guys and an NVIDIA cluster.
3 guys and a cluster is worth $10 billion minimum these days.
Do not give the VCs any ideas, but the scramble is real. If you are not doing an AI mega deal right now, what are you even doing?
Apparently, you are buying back your own factories.
Oh, you mean Intel? $14.2 billion to buy back a 49% stake in their island fab.
The regulatory filings for that hit tomorrow. I know you are already clearing your morning to read exactly how they are structuring that financing.
Finding $14 billion in the corporate couch cushions is going to be a fascinating magic trick. Tomorrow's radar.
I'm staying up late just to see the Intel filings hit tomorrow. $14.2 billion to buy back that Ireland fab joint venture.
I'm already refreshing Edgar. I need to see the exact financing structure on that. You don't just find $14 billion in the couch cushions.
While you hunt for footnotes, keep an ear on the beauty sector. The gossip on Estée Lauder and Puig is getting incredibly loud. Supposedly, it's a massive, primarily stock-based tie-up.
Stock-based? Oh, come on. Estée using their paper right now feels completely desperate.
Completely disagree. It's actually a brilliant defensive play. Lock up European market share while European dealmakers are literally outperforming us right now.
I'll buy that narrative when I see the actual term sheet. Same goes for Gilead extending the Arcellx tender offer deadline again tomorrow. Show me the data.
Biotech deadlines are just suggestions anyway.
Fair point. We'll see what actually clears the wire by morning. Keep reading the footnotes.
And keep dodging the pitch decks. Catch you tomorrow.